A few weeks after Zambia welcomed the upgrade of its credit rating to a B+, the S&P have since shocked the markets by downgrading US sovereign debt to a AA+ rating. If looked at separately, this would suggest that the long-term outlook for Zambia is positive, while that of the US negative. However, the downgrade of the US is likely to send shockwaves through the global economy, threatening to plunge it into an unwelcome double-dip recession. The knock-on effect is likely to result in tumbling share and resource prices, with copper taking the brunt of the drop in global consumer demand from the US. With an economy heavily reliant on copper mining, the looming recession might threaten Zambia's economic growth prospects and may lead to a downgrade of our B+ rating, thereby increasing our cost of borrowing, and of course, in the long term, the economic outlook seems bleak. My concerns are that Zambia has not done enough to cushion itself from an impending burst of the high copper price bubble, and that with a change in government, which is a possibility after the 20 September pause, Zambia could find itself ill-prepared to tackle the challenges of another global economic downturn. When I presented these concerns on the Zambian People's Pact on Facebook, I got a mixed feedback of opinions from group members. Alinuswa Mamulima laid bare our exposure to market volatility, stating that Zambia is at the whims of fate or market forces and that our government has no plan for when the price collapses. Mwinga Chelo sounded off a more optimistic note, saying he believes Zambia is actually immune to global recessions because we run a cash-based economy and our main buyer of copper is China, which he assumes will continue growing even during a global recession. Kaimfa Chandangoma summed it up well, stating that the high copper prices Zambia is enjoying are a once-in-a-lifetime opportunity, and if we fail to take full advantage of it today, we shall only have ourselves to blame in the future. Given the UAE as a case in point, he noted that they realized early that oil is a wasting asset and took a deliberate decision to invest in tourism and financial services, which he says projections show that they will be able to sustain the economy even if oil was run dry. My view is that even though government has done well to grow the economy and invest in infrastructure such as roads, schools and hospitals, they have not done enough to provide us with a safe landing in the event that the copper price bubble bursts. We are not immune to recession as we experienced during the 2008 global downturn. The knee-jerk reaction to a drop in price of copper for business is to cut investment and production, which in turn leads to massive job cuts, loss of business for subcontractors, and slashing of the tax take into national coffers. Though it may seem we have missed our opportunity to take full advantage of the boom years by diversifying away from mining, I still think opportunity still looms. How we choose our leaders this year will have a strong bearing on how we will deal with future economic challenges such as the ones I have just highlighted. This recession may or may not happen, but it should ring alarm bells as we decide who to give our precious votes. The three major parties, MMD, PF and UPND, need to be scrutinized, and we must demand that they tell us, for example, how they plan to cushion the economy in the event of a recession. How I wish we could have presidential debates where candidates are asked to state their position on such issues. Once we can make an informed decision on our votes, can we truly say we have elected the right person for the job? Peace and love, Gongs.